We've all heard the promise of AI in finance, right? But what if an intelligence could truly learn, adapt, and make complex decisions like us? Not just following rules, but maybe anticipating market shifts, even like creatively developing new strategies. Today, we're taking a deep dive into AIFEEX. It's a platform that claims to marry cutting edge artificial general intelligence, AGI, with, well, the dynamic world of digital finance. So the question for us and for you, is this the future of finance, made accessible, smarter, or are there hidden complexities, risks we need to be aware of? Let's unpack this together.
Yeah, it is a fascinating idea. We're drawing mainly from a detailed YouTube transcript today, which really lays out the AI, RFE
Mm.
vision and the tech behind it. They claim to leverage not just advanced AI, but a true AGI. And they combine that with blockchain and DeFi, decentralized finance, to create this, well, comprehensive financial ecosystem. So we'll be looking closely at how they aim to simplify really complex financial data, make it understandable, actionable for you, and we'll highlight its unique strategic advantages, the ways it might generate returns, and of course, the critical risks, especially for anyone tracking innovative investment opportunities.
Okay, so moving from just specialized AI, the core concept here is AGI. Can you maybe elaborate a bit? Why does AI FX think AGI is like fundamentally different for finance? They're not just talking about AI that's great at one thing, like predicting stock prices based on rules.
Exactly. Yeah. When we talk about AGI here, AIFEX is claiming an intelligence that can understand the nuances, things like global economic reports, adapting to unforeseen geopolitical events, and even creatively developing new trading strategies across different markets. More like a superhuman financial strategist, not just a rule-based algorithm stuck in one area. This ability to understand context, correlate seemingly unrelated data points, that's what supposedly sets it apart. Imagine a system that doesn't just process numbers, but kind of grasps the meaning behind them in a world that's constantly changing.
That cross-disciplinary learning, that sounds absolutely crucial. Traditional financial systems often operate in these silos. How does AI FX's AGI actually bridge those gaps?
Well, this is where the AGI is meant to really shine for AI Feeks.
Yeah.
If you think bigger picture, this kind of intelligence lets it link up financial services that are usually pretty separate. Think about cutting-edge DeFi running on public blockchains in the established world of CeFi, centralized finance, traditional institutions. Then you've got sophisticated quantitative funds using complex math models, and even autonomous AI agents. AIFEX aims to integrate all of these into one single cohesive intelligent system. And that deep integration across different financial sectors, that's a huge challenge for conventional specialized AI. They usually only excel in their narrow thing. AIFEX is essentially trying to build a unified intelligence layer over the whole financial world.
Right. And at the very heart of this AGI engine, they mentioned something specific, the T-Queen Financial LLM. They describe it as proprietary, a large language model with what was an incredible 270 billion parameters, processing global financial data in real time. Okay, for those maybe less familiar with AI models, what does having 270 billion parameters actually signify? What does that mean in practice?
Good question. Yeah. Think of parameters as like knowledge points and connections inside the AI. They let it understand, process, and generate human-like text, or in this case, financial data and reports. So with 270 billion parameters, this LLM is designed to constantly crunch, analyze, and learn from this huge, ever-changing ocean of global financial info in real time. It represents a monumental data processing and interpretation capability applied directly to market dynamics. It's not just reading numbers, it's designed to interpret news, sentiment, economic indicators, regulatory changes globally, almost instantly.
Okay, with that kind of processing power and understanding, the next logical step is how does AI Fix actually turn this into, tangible opportunities, potential returns for users? The sources mention this big vision's 7 distinct ecosystems, things like high-frequency trading, arbitrage, decentralized lending, asset tokenization. It's a lot. For today, maybe let's zoom in on a few of the most compelling ways it aims to generate profit.
Absolutely, yeah. The primary profit mechanisms they talk about are quite sophisticated. And they're all powered by this advanced AGI, which is constantly learning, adapting. So for example, their AI DeFi Staking Protocol. It doesn't just stake your assets. It uses AGI to identify and select the optimal cross-chain staking pools out there across different blockchains. It's constantly searching for the best yield, automatically managing things like underlying liquidity, gas fees to maximize the net profit, and it compounds those profits for you. without you having to do anything manually.
Okay, so it's not just finding a good return, but actively optimizing the whole process.
Exactly.
That's a pretty big difference from just finding a staking pool yourself. What else is contributing to potential returns?
Well, then there are the high-frequency AI quantitative funds. Quant funds use complex math models and algorithms to find and exploit market opportunities. AIFEEX's AGI automates this trading across multiple markets at the same time, capitalizing on tiny price movements humans would just miss. Beyond that, AIFE actively engages in arbitrage, that's profiting from tiny price differences of the same asset on different exchanges. Buy low here, sell high there almost instantly. And it also aims to capture something called MEV, or minor extractable value.
Right, MEV. That can be a bit technical for some listeners. Can you maybe break that down quickly? What is MEV and how does AIFEX claim to capture it?
Sure. MEV, minor extractable value. It basically refers to the profit that can be made by strategically playing with transaction order within a block on a blockchain,
Mm.
excluding reordering them. Miners or validators, they have the power to do this. AIFEX, using its AGI, aims to optimize this transaction ordering to gain an advantage, finding opportunities to profit from these reorderings. The key here again is that the AGI is designed to execute these complex, super-fast strategies across all these mechanisms and continually adapt as the market changes.
They even quote the legendary trader Paul Todd Jones saying, an AI like this finishes a week's trading before coffee gets cold.
Uh-huh, yeah.
I mean, I struggle to finish my emails before my coffee cools down. That kind of efficiency is just staggering.
It really is.
But beyond just raw speed, what are the strategic advantages of that rapid adaptation in the, cutthroat world of financial markets?
That quote does perfectly capture the speed advantage. But it's not just speed. It's about deterministic low latency. In high-frequency trading, algorithms are fighting for fractions of a second. So the ADI's continuous learning and real-time adaptation, that offers a potentially decisive edge. It means it can react to surprises, shift strategies based on new data, execute orders, capture things like MEV in a way that generic cloud computing or human traders just can't match. It suggests a fundamentally different way to generate alpha, those returns above what the market just gives you.
That's incredibly compelling, especially when you hear some of the figures mentioned. However, the source also talks about some very high potential returns,
Right.
like 400, 1,000% APR on staking. Now, that sounds amazing, but it immediately raises a red flag for many people.
And it should. This raises a really important question, and it's critical for listeners to understand this part. While potential returns like 400, 1,000% APR sound incredibly attractive, you absolutely must acknowledge that such high returns inherently come with high risks. Very high risks. These figures are often theoretical maximums, or they're achieved under specific, maybe ideal, perhaps temporary market conditions. Real-world performance always needs careful, long-term observation, and it's absolutely crucial for anyone even thinking about getting involved to understand such returns are not guaranteed, and the capital involved is always at risk. The speed and adaptability are clear advantages, yes, but they don't eliminate market volatility or other systemic risks.
Okay, that's a crucial point. So beyond speed and these profit mechanisms, what are AIFEX's truly unique strengths? What gives it that strategic edge, makes it distinct, particularly when you think about competitors catching up? What keeps them ahead?
Well, another intriguing aspect is their emphasis on the proprietary token technology. It sounds like it's not just a buzzword. It's apparently built on highly advanced infrastructure. They mention large GPU clusters, specialized chips like FPGA and A6. Now, these aren't just powerful graphics cards. FPGA, field programmable gate arrays, and A6 application-specific integrated circuits. These are custom-engineered hardware. They're essentially hardwired to perform specific, complex financial calculations at speeds way beyond general-purpose processors. This isn't just a slight edge, it sounds like a foundational advantage. It would require immense R&D, huge capital, for any competitor to even try and replicate. Creates a strong technological moat around their core offering.
That kind of custom hardware definitely speaks to serious commitment. They also talk about a real-time risk management system. They call it a tech mode or technology insurance. How does that fit into their strategy? What's it mean for users?
It suggests a strong focus on protecting assets, while at the same time pursuing pretty aggressive strategies. So the AGI isn't just hunting for profit. It's designed to continuously assess and manage risk across all those different ecosystems, providing a layer of protection that uses the same advanced tech. And furthermore, this vision of an all-in-one ecosystem, integrating all these diverse financial services, plus features like auto-compounding for returns, cross-chain liquidity for moving assets easily. It's really ambitious. Cross-chain liquidity, for instance, lets assets move efficiently, cheaply between different blockchains. That removes a huge barrier in DeFi. So this comprehensive integration, it sounds like it could simplify complex institutional level investing, make it much more accessible for everyday users, potentially democratizing access to strategies that were previously just for the elite.
Taking that vision even further, the source references Mark Andreessen and this phrase, the iPhone movement of Web3. What's that analogy telling us about AIFEX's bigger goals?
Right. If we connect that to the bigger picture, AIFEX's broader vision really is to make sophisticated financial tools and investment strategies accessible to a much wider audience, like the iPhone movement of Web3. Think about it. The iPhone didn't invent the smartphone, right? But it made complex technology intuitive, user-friendly, opened it up to the masses. AFEX seems to aim to do something similar for advanced financial services, moving from complex fragmented systems to a user-friendly integrated experience. So it's not just about making money. It sounds like it's about fundamentally changing the landscape of personal finance through technology,
Right.
giving individuals unprecedented control and sophisticated tools.
Okay, while that vision, the potential of AGI-driven finance, it's clear, it's compelling. But as with any investment, especially in crypto, which is volatile, evolving so fast, there are significant risks. You absolutely need to consider these. We need to balance the enthusiasm with some realism here.
Definitely. And this raises the crucial question. What are the key risks highlighted in the material? Primarily, there's the ongoing uncertainty of regulation. Regulatory environments across different countries are still very much in flux for digital assets and AI. That means rules can change unpredictably, potentially impacting AIFEX's operations, or even the legality of certain products it offers. Then, of course, there's the inherent high volatility of the crypto market itself. Prices can swing wildly, quickly, regardless of the tech underneath. Even the smartest AGI can't completely insulate you from broad market downturns.
And what about the AGI itself? Is there risk tied to its long-term performance? Can we trust it?
Absolutely. That's a crucial risk. The long-term performance of the AGI model itself will its real-world effectiveness, its ability to adapt to truly unforeseen market shifts, its consistent profitability. Will that actually match the theoretical projections over, say, years? There's always a risk of issues like overfitting, where a model looks great on past data but fails when faced with genuinely new market conditions. So while the general market trends for AI and blockchain show immense growth potential, rigorously assessing these very real risks remains absolutely critical for anyone considering getting involved. AI fee is definitely cutting edge. And with cutting edge, well, comes a degree of the unknown.
So wrapping this up, what does it all mean for us? AIFEX is certainly putting forward a compelling, very ambitious vision for an AGI-driven future of finance. Their main goal seems to be automating and simplifying complex investment, complex risk management, making it more accessible, more efficient for everyone. Through this comprehensive, all-in-one ecosystem with that proprietary T-Queen technology and its powerful AGI right at the center, it's an incredibly ambitious project aiming to redefine how we engage with finance.
Yeah, and if we connect this to the really big picture, maybe leave you with this thought. If AGI truly achieves this goal, managing personal finances with such excellence, such precision efficiency, constantly adapting to optimize wealth generation, how might that fundamentally redefine our whole concept of wealth itself? And, maybe more pragmatically, what becomes the future role of traditional financial experts, advisors, institutions, in a world where an AI can potentially outperform and outmaneuver human capabilities? These are fascinating, maybe even profound questions to ponder as this technology keeps evolving and weaving itself into our financial lives. It could shape not just how we invest, but how we think about money altogether.